The year is 2025. The very air crackles with uncertainty. The Dow Jones flickers like a dying star. Donald J. Trump, he of the Gilded Tower and Twitter tirades, is back in the Oval Office. And just like his first act, he's poised to rewrite the rules of the economic game. But this time, we'll be ready. This time, we'll navigate the chaos and emerge stronger, wealthier, more resilient than ever before. With the Trump administration set to shake up economic policy again, investors are asking one big question: where should I put my money before the chaos hits? Stick around, we're breaking down your smartest moves for 2025. The signs are unmistakable. Tariffs loom large on the horizon, casting a shadow on global trade. Regulations, those pesky safeguards against corporate greed, are being dismantled with the fervor of a demolition derby. Fossil fuels, long left for dead in the face of climate change, experience a resurgence under Trump's watchful eye. Trump doubles down on tariffs, rolls back regulations, and pushes energy independence. This creates market volatility, inflation risks, and sector shakeups. But with the right strategy, you win while others panic. In times of turmoil, it's tempting to chase the latest shiny object, the next Bitcoin, the next GameStop. But true wisdom lies in seeking refuge in the familiar, the dependable, the downright boring. That's where U.S. Treasury Bonds and Treasury inflation-protected securities, or TIPS, come in. Start with stability. Treasury Bonds and TIPS are classic safe havens. When markets dip, these hold value, and TIPS adjust for inflation. You won't see massive gains, but you will protect your capital. Imagine a company so unshakably profitable, so impervious to the whims of the market, that it pays its investors a dividend like clockwork, year after year. These aren't your flashy tech unicorns, but rather the blue-chip stalwarts of the American economy: Coca-Cola, Johnson & Johnson, utilities, consumer staples. Next, dividend aristocrats. These companies consistently pay out year after year no matter who's president. Think Coca-Cola, Johnson & Johnson, utilities and consumer staples. They're the income kings of a chaotic market. Trump's love affair with fossil fuels is no secret. He sees America as an energy superpower, a land flowing with oil, gas, and coal. And while this may be at odds with the fight against climate change, it presents a unique opportunity for savvy investors. Trump's energy policy favors oil, gas, and coal. That's a green light for fossil fuel stocks. ETFs like XLE or players like ExxonMobil and Chevron could benefit big. With Trump's penchant for military might and infrastructure projects, companies in these sectors are likely to see a windfall of government contracts. Lockheed Martin, Raytheon, and Caterpillar are just a few names that come to mind. These behemoths of defense and construction are poised to reap the rewards of Trump's policies. And with talk of boosting defense and infrastructure, companies like Lockheed Martin, Raytheon, and Caterpillar become power moves. Expect more contracts, more builds, more government spending. In a fast-paced world chasing instant results, there's value in embracing a steady and reliable strategy. High-yield savings accounts and money market funds might not deliver the thrill of stock market highs, but they offer a priceless asset in turbulent times: peace of mind. Don't underestimate the power of cash. At present, high-yield savings and money market funds are offering returns in the range of 4 to 5%. This is dependable passive income with no risk, plus the flexibility to seize opportunities as they arise. Since time immemorial, gold and silver have been prized for their beauty, their rarity, and their ability to hold their value in the face of economic turmoil. In today's world of digital currencies and volatile markets, these precious metals remain as relevant as ever. Gold and silver, still undefeated when uncertainty hits. They're inflation hedges, recession shields, and fear-friendly assets. While America grapples with the return of Trump, other parts of the world are experiencing rapid growth and development. India, with its burgeoning middle class and technological prowess, is a prime example. Latin America, with its vast natural resources and youthful populations, is another region ripe with opportunity. Looking outside the US, countries like India, Brazil, and Mexico are growing fast and aren't as tied to US policy swings. International ETFs or emerging market funds can diversify your risk. Despite the political headwinds, certain fundamentals of the American economy remain strong. People need places to live, and in states like Texas and Florida, the population influx shows no signs of abating. Residential real estate, particularly in suburban and exurban zones, continues to be a solid investment. And don't forget real estate. States like Texas and Florida continue to attract businesses and migrants. Residential property values are holding steady or climbing, especially in suburban and exurban zones. As the sun sets on this new era of economic uncertainty, one thing is clear. The future belongs to those who are prepared. By diversifying your portfolio, seeking out undervalued assets, and staying informed about the ever-changing political landscape, you can not only weather the storm but thrive in the face of adversity. Remember, fortune favors the bold, the adaptable, the informed. When the market shakes, wealth isn't lost, it's transferred. Don't panic, reposition. Play defense now and strike when the dust settles. This was a narrative rush. Stories that hit before your break's over.